So, a very good morning to student. Today we are having a topic called trial balance, benefits, limitations and errors. Students, in previous lecture we have thoroughly understand the rules and the general nature of the accounts. We have categorized each transaction into two parts. The first part is the debit side and the second part is the credit side. We have thoroughly understand what type of accounts have a debit balances and what type of accounts having the credit balances. We also prepare a question, a trial balance for all the necessary accounts. We have understand thoroughly the concept of each and every accounts. Now our today's target is to understand what are the benefits of trial balance, what are the limitations of trial balance and what are the errors that does not affect the trial balance. So before understanding the limitation and the errors, we shall understand the first concept, that is the benefits of trial balance. So students, we have written some of the benefits of the trial balance as you can clearly visual on the board. What are the benefits of trial balance? The first benefit is to check the mathematical accuracy of amount. The first and the foremost importance of trial balance is to check the mathematical accuracy of the amounts. The second is to check all accounts have entered into trial balance or not. That is, if any account has not been entered into the trial balance, it will not match. So trial balance is prima facie check that all accounts have entered into the trial balance. If any account has not been entered, then trial balance will not match. Then third is to check whether all debits are equals to all credit or not. That is to prove the duality principle. So student, I want you to please write down this on the notebook and you can also see this on the page number 66 of your book. So students, now our next topic is the limitation of trial balance. Students, please check if the total debit side does not match with the total of credit side. That means in benefits we have understand that total of debit will always equals to total of credit side. But what if total debit side is not equals to total credit side? That means it shows that there must have at least at least one error or mistake. That means if trial balance does not agree, it gives us a glimpse that there are some errors left behind. So what are the type of errors? That error can be of wrong amount or wrong account. So if trial balance does not match, it gives a businessman a glimpse that total of debit side is not equals to total of credit side. It shows that there must have at least one or more error, and that error can be of wrong account and wrong amount. So students, our next topic is the errors that do not affect the trial balance. Sir, you just told in the previous topic that trial balance is the mathematical accuracy. If debit is not matched with the credit, there must be an error, and we come to know by preparing the trial balance. Now the topic, this is the most important topic, which says there are some errors that exist. There are some errors that exist, but it does not or do not affect the trial balance. So how? If it is an error, it will surely affect the trial balance. But are there some errors that does not affect the trial balance? Yes. So we can conclude that trial balance is not a conclusive evidence of correction of or the correctness of the accounts. That means there are some errors that do exist, but it does not affect the trial balance. So if your trial balance matches, if the trial balances of business matches, it does not give a conclusive evidence that the all accounts are correct. It just gives a prima facie evidence or prima facie glimpse that the accounts are correct. But we are now discussing there are 6 types of errors that exist in the accounts, but it does not affect the trial balance. I request all of you to prepare this chart in your notebook and then we will continue with this lecture. So students, I hope you have prepared the chart. You can do one thing, you can pause the video and just prepare this chart. We are now continuing with our one by one explanation of each and every type of error. The first principle is the error of omission. I used the wrong word, it's not principle, it's errors. The errors of omission. So what is error of omission? Omission means we forgot to record the transaction. For example, if I purchase this marker from Mr. Jitu, what recording of transaction should I need to do? I need to purchase account debit, Jitu account credit. Or if it is a cash transaction, I should record purchase account debit, cash account credit. But what happened? I forgot. Neither I do debit nor I do credit. So I fully forget the transaction. It means if I fully forget the transaction, neither account is debited nor account is credited. So automatically neither there is debit nor there is credit. The trial balance will match. This is called as error of omission. We forgot the transaction. If we forgot the transaction, we neither do debit, neither do credit. So the trial balance matches, but error exists. Do you understand the point? I want you to go to page number 67 and see the error of omission and the example. So if you read the example, go to page number 67, my dear friends. Page number 67 of your book, error of omission. It suggests the example, $100 of equipment is bought for cash. What recording of transaction you will make? $100 of equipment is bought for cash. You will record the transaction, equipment account debit with $100, cash account credit with $100. But what happened? The transaction is forgotten. We have omitted or forgotten the transaction. We neither debit the equipment nor credit the cash. What happens? The trial balance will ultimately match because no transaction affect the either debit side nor the credit side. I hope, student, you understand this concept. Now comes with the error of commission. What is error of commission? A financial transaction posted with correct amount. Posted with, so means we have not forgotten the transaction. We have made the transaction. We have posted with correct amount at correct side. But what happened? At wrong account. So how it is possible? Yes. Let us take an example. If we have purchased goods from Mr. Jitu, what entry I need to pass? Purchase account debit, Jitu account credit. But I have similar name of account with me named Jitendra. So I have misconfused or I have confused with the Jitu and Jitendra. So what I did? Purchase account debit, Jitendra account credit. But actually I have made a separate account of Mr. Jitu. So I have posted the correct amount, $100, correct side, debit side, but wrong account. Instead of Jitu account, I have posted the transaction into the Jitendra account. This type of error generally happened with a similar name of accounts. Are you understand, students? So come to page number 67. We have the example. For example, we have made a payment of stationery is posted for an error to the advertisement account. So what they did is they did an expenditure for the stationery, but they wrongly debited the stationery account. They wrongly debited the advertisement account. Now what happened? If I purchase this all goods are stationery item. This should be properly classified into the stationery account. But we have posted into the advertising account. Sir, for purchasing the marker, the ink pen, the books are the advertisement or the stationery? So it is a stationery. So the correct account classification should be stationery and not the advertisement. Since this is the error of commission, a financial transaction posted with correct amount. That is, I have posted the correct amount. For example, if I purchase these 3 markers for $100, I posted the correct amount, dollar. With correct side, I have made a debit. Either it is an advertisement or it is a stationery. Both are expenses. But at the wrong account. I have to account in the stationery account, but I have mentioned it into the salary account. So ultimately trial balance will match because debit is equals to credit. So trial balance will match, but there is an error called error of commission. We again read it. A financial transaction posted with correct amount at correct side but with the wrong account. I want you to please round the error so that you will understand this concept, particularly asked in multiple choice question various times. This is a tricky and technical questions. So what is error of commission? Again, a financial transaction posted with correct amount at correct side of wrong account. So I am giving an emphasis on the wrong account. Everything is right, only the name of account is wrong. Student, I hope you understand. So students, now we are moving to the next error, that is error of principle. Sir, we have already understand the principle, the capital expenditure and revenue expenditure. For example, if I purchase the air conditioner and I have made an incidental expenditure on purchase of assets. For example, if I purchase an assets for rupees 10,000 and if I incur some direct expenditure to put my air conditioner to the place and to the location, I made some expenditure, say delivery cost or installation cost of rupees $1,100. So if I purchase this air conditioner on $10,000 and if I made an incidental expenditure of $1,100, what would be the cost? The cost of air conditioner plus incidental expenses. This concept we have already covered under historical cost concept. So what happened if I purchase an air conditioner for $10,000 and made an incidental expenses? That incidental expenses will be added to the cost of assets, isn't it? But if I incur some future expenditure, say yearly repair and maintenance expenditure. Now students, we need to understand the initial expenditure incurred while purchasing the assets or an inventory will be added to the cost of assets, and the later on expenditure, the year end expenditure or the recurring expenditure will be charged to income statement or will be treated as an expenses. So this error says a financial transaction post with correct amount and correct side of wrong class of expenditure, wrong class of accounts. That means we have considered the capital expenditure as revenue expenditure or revenue expenditure as capital expenditure. These things we need to understand. This is called as error of principle. Which principle? Principle of historic cost. Principle of historic cost. This is an error of principle of historic cost. If any expenditure incurred which is directly associated with the purchase of assets or inventory will be added, but what we did, we have charged it to, we are treated it as an expenses. And for example, if we made an expenses but charged to the cost of assets or inventory, it will be treated as error. And this type of error is known as error of principle. Students, I request you to please come to page number 67 and read the example. Payment for fuel of vehicle has been debited to motor vehicle. You have fill the fuel in the motor vehicle. So sir, it is a fuel expenditure. It is a fuel expenditure. It should not be added to the motor vehicle account. That means it is an error of principle because the fuel expenditure is not directly associated with the motor vehicle. But if we have incurred any expenditure which is directly attributed to the cost of motor vehicle, for example, installation cost, delivery cost, all the expenses which we have incurred while purchase of goods or assets will be added, but the later on expenditure will not be treated as cost of assets or inventory, rather it will be treated as an expenses. This type of error is known as error of principle. Students, this is very important principle. You need to understand the concept in thoroughly. If you do not understand, please rewind the video and listen to it carefully. I am repeating again, error of principle is the principle where you are treating your capex, that is your capital expenditure, as revenue expenditure and revenue expenditure as capital expenditure. I hope students you understand this concept. Now come to example, error of principle. Payment for fuel of vehicle has been debited to the motor vehicle account. Sir, it should not be debited to the motor vehicle account because it is a revenue expenditure. It is a day-to-day expenditure. It is a yearly expenditure. Instead of motor vehicle running expenses, yes, it should be treated as motor. It should be treated as motor vehicle expenses. So students, I hope you understand the concept. I am repeating once again the example. The payment for fuel for a vehicle has been debited to motor vehicle account instead of motor vehicle running expenses. This is an error of principle. The fuel expenses should be treated as revenue expenditure, that is yearly expenditure, and it should be treated as an expense rather than included into the cost of motor vehicle. Motor vehicle expenses are classified as expenses while the motor vehicle are non-current assets. Yes, if I purchase this marker and if I pay delivery cost, for example, if I purchase this marker for $10 and I incurred $5 for delivery charges, so the delivery charges I incurred of $5 will be added to the cost of assets. This is historical cost principle. So effectively my marker will be $15. But if I purchase the refiller of this marker, this shall not be added to the cost of assets because it is a day-to-day expenditure. Do you understand my point better? So this is called as error of principle. Students, now we are moving to the next type of error, that is called error of compensation. So what do you mean by the term compensation? Compensation means when one error correct the other error. When one error correct the other error, that is two or more error that cancel each other. I am giving you the simplest example. For example, if I made a cash sales, what entry should I make? I will make cash account debit, sales account credit, but I made an entry of debtor account debit, sales account credit. I made a cash sales, but I made it a credit sales. This is the first error. Now the second error, after 2 days, I made a credit sales. I have to make an entry, debtor account debit, sales account credit. But what I did, I made a cash entry, cash account debit, sales account credit. Now understand, student, it is an error of coincidence. The word is not in the book, the coincidence, but I can say it is a coincidental error. With the same amount, I pass a wrong entry on one day, and with the same amount, I pass the wrong entry on another day. But that first entry, the first day wrong entry get correctified with the second day wrong entry, and the second day wrong entry get correctified with the first day wrong entry. For example, if I take another example, if I made a day one transaction of cash sales of $10,000, I have to pass an entry of cash account debit, sales account credit with $10,000, isn't it? But I pass a wrong entry of debtor account debit, sales account credit. So the first error is I made cash transaction as a credit transaction. Second day, I made a credit sales. I have to pass an entry of debtor's account debit, sales account credit with same amount of $10,000. But what I did, I passed a wrong entry of cash account debit, sales account credit. So the first error, I treat cash sales as a credit sales, and second error, I treat credit sales as a cash sales. So the first day error gets compensated with the second day error, and the second day error get compensated with the first day error. This is the error of coincidence. This error is called as compensating error. Two or more error that cancel each other. This happens sometimes. This error exists, but it does not affect the trial balance because cash account is same, debtor account is same, sales account is same. That means trial balance will match, but error exists. Thank you. So students, we are moving to the next type of error, that is error of original entry. What is error of original entry? Students, a wrong amount, now understand, this is a wrong amount is entered in the books of prime entry. Now this type of error says a wrong amount has been entered, but this wrong amount has entered in debit as well as credit side. For example, if I purchase a marker of $10, I have to pass an entry purchase account debit, cash account credit, isn't it? Purchase account debit, cash account credit with $10. But what I made an error? I made purchase account debit, cash account credit with $100. I made $100 on debit side, I made $100 on credit side. That means debit match with credit but with the wrong amount. I have to post it $10, but instead of $10, I have posted the amount $100. So that means trial balance will match, but error exists. Error of original entry. Error of original entry. Error of original entry. पास में कुछ पॉज करना चाहता हूँ तो 1 सेकंड में पॉज कर दूँगा. दूर रहकर तुम बोलिए. So students, I want you to please come to the example on page number 67. First error of original entry, that is a purchase invoice of $100 is entered in the purchase journal as $10. So the same example I have given you. We have made a purchase of $100 but we have posted at $10. So but the main thing is we have made $10,000 on debit side and $10 on credit side. That means debit match with the credit but error exists due to wrong amount. This is error of original entry. Now students, we are coming to the last error, that is complete reversal of entries. I can explain this error with you by way of example. For example, first of all we understand what it says. Account with debit nature is credited and credit nature is debited. Example of this error is, if I made a purchase of $10 in cash, I have to pass an entry of purchase account debit, cash account credit, purchase account debit, cash account credit for $10. But what I did is I reversed the transaction. I did cash account debit, purchase account credit. That means the item which need to be debited I have credited, and the item which need to be credited I have debited. So ultimately debit match with credit, but the account which with the debit nature is credited and the account with credit nature is debited. So that means I have reversed the transaction. Fundamentally I made a wrong entry. But debit side and credit side matches. That's why trial balance matches. But error exists. That error is complete reversal of entry. You made a wrong entry instead, I can say. That is, the item which need to be debited is credited and item which need to be credited is debited. So student, I hope you understand the concept. I want you to please come to page number 67 for the same. A payment made to Sam is debited to bank account and credited to Sam's account. What error we have done this? A payment made to Sam, the entry need to be recorded is Sam account debit, bank account credit. But what we did? Bank account debit, Sam account credit. That means we have completely reversed the transaction. We have completely made a wrong entry. But why trial balance matches? Because one account is debit, another account is credited with the same amount. But we made a fundamental error, and that fundamental error is we have made a wrong entry. We have reversed the entry. So student, I hope you understand this error that does not affect the trial balance. So prima facie rule of trial balance is to check the mathematical accuracy of the trial balance, to check all accounts are properly accounted, to check whether all debits are equals to all credit, that is to satisfy duality concept. But some error that do not affect the trial balance. So there are some errors which exist in the books of accounts, but it does not affect the trial balance. There are 6 types of error. We are recapitulate all the errors once again. The error of omission, that is we omitted to record the transaction. We completely omitted to record the transaction. This will eventually does not have any debit or credit side. Error of commission, that means correct amount of correct side at wrong account. Error of principal, wrong class of accounts. Capital expenditure is treated as revenue expenditure and revenue expenditure is treated as capital expenditure. Compensating error, 2 or more error get correct another error. That is 2 or more error that cancel each other, that is error of coincidence. Error of original entry, that is a wrong amount has been entered in the books of prime entry. And the complete reversal of entry means the item which need to be debited is credited and the item which need to be credited is debited. So student, I hope you have understand the whole concept of trial balance. We have covered the practical question in part 1. Now this is part 2, benefits, limitation and errors. So students, this is the one of the most important topic of your exams. At least 1 to 2 mark question in every exam comes from this topic itself. So you need to thoroughly understand this concept And I hope you love this session. So thank you so much for the session. We'll cover the practical question in third session. Thank you so much.